Welcome back to this channel. Today we are diving deep into a fascinating topic that affects not only our financial decisions but also our everyday lives. We are going to explore the clash of egos in the stock market versus in real life. And I will give you 4 points which can save you from negative effects of ego. In that 4 points, third is very crucial and also my favorite. But if you fail to manage that 3 points, fourth point will surely help you to keep a cool mind. So get ready for an eye-opening discussion. In simple terms, ego is our sense of self, the part of us that wants to be recognized, praised, and admired. While a certain level of ego can be healthy, it can also a double-edged sword. There is a very thin line between healthy and toxic ego. In real life, ego can sometimes lead us to make impulsive decisions, put our desires above others, and resist admitting our mistakes. It can create conflicts and hinder personal growth. In our everyday lives, ego driven behavior can lead us to negative consequences. It might cause us to overspend, ignore sound advice, or refuse to seek help when we need it. When ego takes reins, we might prioritize appearances over substance, focusing on impressing others rather than staying true to ourselves. Moreover, ego can blind us to our shortcomings, making it difficult to learn from our mistakes and grow as individuals. It can lead to unnecessary rivalries, jealousy, and lack of empathy for others' feelings and struggles. Now, let's turn our attention to the stock market. Ego plays a significant role here as well. Investors and traders often face the temptation of making decisions based on ego rather than sound analysis. One common mistake is trying to time the market perfectly. Ego driven investors might believe they have a special talent for predicting market movements, leading them to buy at peak and sell at the bottom. This behavior can result in significant financial losses and also mental breakdowns. Additionally, ego can lead to overconfidence in one's abilities, causing investors to take on excessive risk and overlook potential downsides. It's essential to maintain a balance and realistic perspective in the face of market fluctuations. So now let's see that 4 points. How can we control or overcome the negative effects of our ego both in the stock market and real life? First point is self-awareness. Recognize when your decisions are influenced by ego. Be honest with yourself about your motives and emotions. Second point is humility. Embrace humility and acknowledge that no one has all the answers. Seek advice and learn from others' experiences. Now, third and my most favorite point is stick to a plan. If you don't have self awareness or humility, which I am sure you will not have when you are clouded by ego, followed by major successes in the recent past, follow a well thought out investment or trading plan which will help you not to lose more than your capacity. Avoid making impulsive decisions based on Short term emotions. A plan is very, very important. If you fail to follow these 3 points, listen to this fourth point very, very carefully, which is embrace failure. In both worlds, in life and in stock market, view failure as an opportunity for growth. Learn from mistakes rather than letting ego stand in the way of progress. Start again with learning from past mistakes and accept that coming out of failure is not a quick thing but a bit lengthy process that will keep your mind calm and composed, and one day you will see sunshine again. As we wrap up this thought provoking discussion, remember that ego can be a powerful force in both the stock market and our daily lives. By understanding and controlling our ego, we can make wiser decisions and foster healthier relationships. Feed self esteem, not a toxic ego.